Good evening. How many of you have Hindi medium? No, no Hindi medium? No, because one of the students after the class last time asked me to teach half the class in Hindi, which is going to be very difficult for me. So you understand what I am saying. So if there's hardly one or two students, because as it is, it's not for me. It's not easy to be teaching the entire thing in Hindi. Sometimes you speak in Hindi because you are asked a question in Hindi. All right, okay. Have you read GST? You have. Have you read GST in that note? Have you marked your doubts? You have marked your doubts. What are your doubts? Sorry? Okay. Anything else? But before, yes. Why? Why? Why NRIs do? Because they are not earning in India. Are they? Oh my goodness. NRIs are NRIs. What? Merchant Navy. Because he is traveling from one country to another. You understand? No. That is why. But you talked of NRI. Now you are talking of Merchant Navy. So, yes. Yes. You remember I told you that, I told you about 15% global minimum corporate tax? So that you will know when we take up foreign investment, and under foreign investment we take up double taxation avoidance agreements. I told you, remember, that you will know the importance of this and whether this will continue after 15% when we will discuss under foreign investment, double taxation avoidance agreement, and the role of tax havens, if you remember, right? So that will come subsequently. But before I take up GST one by one, all the 23 points, you remember I had given you a paragraph, right? You finish the paragraph, yes. No, on profit. Yeah, government is not concerned whether you are, no, profit. Yeah, if you have made a loss, it is your problem. Okay, finish the paragraph. I think you had finished up to, sorry? Just call him, he'll switch off this. Yes, one country, one. So, I'll even explain this paragraph. But before I explain that, start a fresh paragraph. You would say, taking note of these recommendations, taking note of these recommendations, taking note of these recommendations, comma, the government set up an empowered committee of state finance ministers which was given the task of convincing state governments to adopt GST. Full stop. As a result of the efforts of this committee, a blueprint of GST, was prepared by the committee incorporating suggestions and feedback of states for adopting GST. Full stop. This blueprint was placed as GST bill in both the houses of Parliament. Full stop. After the passage of this bill, and after obtaining the approval of the President, after the passage of this bill, and after obtaining the approval of the President, the GST Act was passed in August 2016. Full stop. Under the Act, an apex decision-making body was set up called the GST Council. Headed by the Finance Minister and having finance ministers of states and union territories as its members. With over 2/3 majority. So that the council will have a federal structure. Okay? So you should be very, very clear that GST is a statutory, because it came by virtue of an act, right? I would request, read whatever you have written, so that I now start thereafter explaining some of the very important points which would ensure that even a layman can understand what is GST. You understand? So please go through what you have written. Let me simplify what you have written. You started by saying that it was Vijay Kelkar committee which was set up in 2004 for the implementation of FRBM Act. I want to tell you, we will discuss this act comprehensively. You need to, because a couple of questions have already been asked on this act, not this year, in the past 2 years, in the multiple choice questions. It is a very important legislation. Right? The act was passed in 2003. It was reviewed in 2016 by N.K. Singh committee, the chairman of the 15th Finance Commission, which submitted its report in 2017. So the questions were asked on that reviewed FRBM Act. All right? But you should also know the original act. Right? This committee was of the view that if you adopt GST, it will be in the nature of a revolution in India's indirect tax structure since independence. How? The committee said that GST will bring down the enormous cascading burden, cumulative burden of multiple indirect taxes of the center and states, which ultimately have to be borne by the final consumer. Correct? Then it went on to list quite a few merits, right? That if prices come down, demand will improve, demand goes up, consumption goes up, investment goes up, GDP goes up, tax GDP ratio goes up, exports become competitive, and you have also written it will bring about uninterrupted movement of goods and services across the nation. I ask you a question. If tax rate is the same throughout the country, it will bring about uninterrupted movement. B, I am sure one of the points in 23 points that you have written is e-way bills. So that is also a very important part of ensuring uninterrupted movement, which I will explain. But first thing first I want to explain is that this committee said that it will reduce the enormous cascading burden. What was it committee saying? The committee was saying as follows. Take a look here. I am giving you, this is pre-GST scenario and this is post-GST. I am writing here value of goods. Let's say goods are manufactured worth rupees 2,000. Pre-GST, before they come into the market, there would be what is called SENVAT, excise duty. Yes or no? Let's say it is 12%. 12% on 2,000 would mean 2,240. Correct? When it comes into the market, the next tax would be VAT. Because this is on manufacturing, this is on sale. Again, let's say it is 12%. 12% on 2,240 would be, I think, 280. So the final price of the commodity in the market to be paid by you and me would be 2,520. Take post GST, 2,000. Even if GST rate is 18%, right? 18% of 2,000, 360. The price would be 2360. This is what the committee was saying. Ultimately, everything would depend on what is the GST rate. I'll give you an example. Before, if you had joined coaching prior to 2017, all that you would have paid is 16% service tax. There was no GST then. Now you are paying 18%. So it would depend. Yes. What are you saying? Ultimately, who is paying? 18. Who told you for GST दो बार लगेगा? No, that is where I would go. I would tell you. That is where I will tell you that one of the very important points that you have here is, one of the very important points to be understood is that GST would be on the entire supply chain. Point number 6. Point number 6 tells you, as a national level VAT, it will be imposed at each stage in the supply chain, from the manufacturer to the wholesaler to retailer and to the final consumer. Correct? But on value added. That you will see when I take up this. Because 18% is shared, 9% center, 9%. This is not shared. I told you the other day that if you want to understand GST, you must first understand SENVAT of the center and VAT of states. And I made it very clear as a hint. I said, if you want to understand GST, you should keep in mind that pre-GST, center was collecting its own revenue through excise duty, called SENVAT. States were collecting their own revenue, called VAT. Under GST, revenues are being shared. Okay? What the consumer pays, you will know when I give you a table on supply chain. Then your question will automatically be answered. Wait patiently. I will explain to you each of these points, and I'll also tell you which are the points to be kept in mind to thoroughly understand GST. All right? Now, after this small thing, I am going to tell you which are the points which you should mark first, so that each of them I go on explaining. Point number 1, it will be a dual tax. Mark it. Let me first mark out the points. Point number 1. Obviously, point number 2 is related to point number 1. Because if it's a dual tax, it will be shared between the center and state. Then point number 3. All right? Point number 5. Six. Not point number 4 is on interstate transactions. That is IGST. Right. Point number 6, 7, 8, 9. All right. Leave out 10, 11, 12, 13. Leave out 10, 11 and 12. Then take up 13 and 14. 15. 16 is very, very important. It has created problems between the center and states. 16. 20. 21 and 23. Okay? Now I'll start explaining to you. Yes. Sorry? GST Council meets once in every 2 months to decide what should be the rate structure, which are the goods where tax rate should be reduced, which are the goods which tax rate should be raised, so on. On what? On what majority? What are you saying? More than 2/3 means what? Is it majority or not? Say yes or no. Correct. Now, there are only 3 countries in the world which have dual GST. India, Canada and Brazil. All other countries have single GST. This is an information you may or you may not note, but I have given you this because more than 170 countries in the world already have GST. So when the committee recommended GST, it said that India gets integrated with the rest of the world, because even then you had more than 150 countries having GST. All right? So it's a dual GST. The fact that it's a dual GST means it is shared. Revenues are being shared between the center and states. Then you have written that as GST, point number 5, as GST merges VAT of the center and VAT of states, it will be in the nature of a national level VAT. Have you understood this point? Obviously, normally to a layman I explain like this. Very simple. I am erasing this. Assume VAT to be river Ganga. Okay? Assume VAT to be river Yamuna. Prior to GST, Ganga water was going to center and Yamuna water was going to states. Correct? There was a bridge dividing the two. GST has demolished this bridge. Now, right from the first bank of Ganga to the last bank of Yamuna, it's a supply chain. From the manufacturer to the wholesaler to the retailer to the final consumer. And GST is imposed at each stage in terms of a value added tax. I am going to give you a table of supply chain very soon. But first thing first, you should understand, since GST merges 2 VATs, VAT of the center at the stage of manufacturing and VAT of states at the stage of sale by states, obviously, logically it will be called national level VAT. Because GST is nothing but a value added tax in the sense that center doesn't impose a separate tax, states don't impose a separate tax, the tax is shared between the center and states in equal proportion. Although Kelkar committee recommended that 7% should go to states, supposing the tax rate is 12%, standard rate as you call it. 7% should go to states, 5% should go to center, but ultimately when the structure was being finalized, it was decided that should be shared equally. So obviously two VATs have merged so that GST is nothing but a national level VAT and it is imposed at each stage in the supply chain. Now comes the question, what is the supply chain? Because I think that's point number 7. Just see. At each stage in the supply chain, there will be input tax credit, so that tax is paid only on value added. I am now going to give you a table of supply chain. And if you have that table in your notes, this table is not given anywhere. It's a table with as many as 8 columns. So please prepare that table. 1, 2, 3, 4, 5, 6, 7 and 8. All right. Column number 1, stage of supply. Go on writing. You must have this table so that you know stage of supply. Then the second column would be value of input. Third, value added. Okay. Fourth, value of supply. Column number 4. 5, GST rate. What is the rate of GST? 6, GST on output. Because this is the output, value of supply, value of output, supply or output. 7 is ITC, input tax credit. And the last column is net GST. Shall I repeat? First is stage of supply. Second is value of input. Third is value added. Fourth is value of output or supply. Fifth is what is the GST rate. Sixth is GST on output. Seventh is ITC, input tax credit. And the last is net GST. Yep. Given the columns, rupees 100. Oh, sorry, not here. It should be manufacturing, because first stage is manufacturing, right? Here you write rupees 100. Value added rupees 30. Value of supply 130. GST rate 10%. GST on output 13. Correct? 10% of one. ITC 10% on 100. Input tax credit. GST on input 10. Net GST rupees 3. Let me complete the table. You have questions to ask, no problem. Now, what is the next stage? Wholesaler. This is stage 1. Stage 2, wholesaler. Because you have written stage of supply. Wholesaler. Correct? What do I write here? 130. Very correct. Let's say wholesaler adds value of 20. I write here 10%, 15, 13, 2. Correct? Which is the next stage? Retailer. What do I write here? Very good. Let's say he adds value of 10. 160, 10%, 16, 15, 1. Correct? Retailer sells it to final consumer for 160 plus 10%. That is for 176. Is it clear? Make this table. I very humbly, modestly, I say no book ever gives this table. Because students mostly don't understand what is the supply chain. Supply chain begins from, it's like saying, it's like what I said just now, that assume Sandbag to be river Ganga and Vat to be river Yamuna. Prior to GST, Ganga water was the authority of the center, Yamuna water was the authority of states. There was a bridge dividing the two. The bridge collapses. GST has collapsed that bridge, which means supply chain begins from the first bank of Ganga to the last bank of Yamuna. That's one way to explain. But when you talk of supply chain in the context of the first stage of manufacturing, then the wholesaler, then the retailer, then the final consumer. This is actually the heart of understanding GST. Have you noticed at each stage, GST is being paid only on value added. But when it comes to the final consumer, where is the value added for final consumer? Where is the input tax added for final consumer? You understand? Now, I repeat, I said that if one has to understand GST, one must understand that it merges two VATs. Since it merges two VATs, the authority of the center and states gets reduced. But states, prior to GST, were having a large number of independent taxes which would give them revenue. Correct? Listen to this statement very carefully. So when GST structure was being finalized, trust me, I pursued it step by step, because Jaitley spent, I would say Jaitley burnt midnight oil. It won't be wrong to say that the premature death of Jaitley was also because of GST. He worked very hard on it. And honestly, it was very difficult to prepare a structure of GST which would satisfy states, because states had two major apprehensions when GST structure was being finalized. One apprehension was that they will lose revenue because so many independent taxes they were imposing. And the second apprehension was that they will lose autonomy. They wanted that the final structure of GST should protect these both, their revenue as well as their autonomy. How they have been able to ensure that, I'll tell you as we go step by step on points that I have listed. But as of now, since we are going point by point, I have said this is the issue of supply chain. Correct? The next thing that you have written perhaps is that GST is a destination-based tax. Correct? What does this mean? Please explain, anybody who has understood this. जिस स्टेट्स में not only goods consumed होनी है, जिस स्टेट्स में goods consumed है और service is being rendered. Coaching is a service. Next IAS is having its coaching center in Bhopal also. Yes or no? So whatever GST is collected by next IAS in Bhopal is shared between Madhya Pradesh and the center. So GST is a destination based tax in the sense that where in whichever state is a commodity is finally consumed or service rendered, that state will share GST revenue with the center. Correct? Not a difficult point. The most difficult point is actually point number 9. Who can explain point number 9? My question is, why is it called goods and services tax?
No, sir, earlier service tax was separate. Now एक ही टैक्स में गुड्स और सर्विस दोनों पे ही लग रहा है, मतलब इस तरह
वो तो anybody can say. वो तो मैंने भी आपको बताया. Is that the only reason?
मतलब सर पहले सर्विस जिस तरीके से गुड्स पे लग रहा है सेम उसी तरीके से सर्विस पे लग रहा है.
Is that the only reason that it's called goods and services tax? Sorry? All stages like? No. Give me a proper example. I thought you were on the right track, but somewhere you have. Yes, that is the answer. Just as you are getting input tax credit for tax paid on goods and inputs, you will also get input tax credit for tax paid on services. I'll give you an example, don't worry. So there are two reasons for it to be called goods and services tax. First reason is everybody knows. Just as goods are being subjected to GST, services are also being, but more important reason is, let's say you are a manufacturer, correct? And you have transported raw material into your factory and you have paid 5 lakhs to the transporter. On these 5 lakhs, transporter has also charged you 18% service tax, which means 90,000 rupees he has also charged you as service tax, correct? Just as you can claim input tax credit for tax that you would have paid on raw material, you can also claim input tax credit for tax paid on services which have been used in the course of manufacturing or trading. That is the reason it is called goods and services tax, which means for all purposes, services have been brought at par with goods, not only in terms of imposition of GST, but also in terms of the input tax credit that can be claimed. Simple as that. All right? Okay. Then there was a question asked, this guy asked me the question, you asked me about composite tax. You know, when GST structure was being prepared, I ask you a question. Should very small traders or manufacturers or restaurants be also covered under GST? If they are covered under GST, it will complicate GST structure to a large extent. So what the government did, it gave an option to such traders, because you have seen whose turnover is up, correct? That do you want to come under GST or you want to be covered by under a composite scheme? Composite means, yes, compromise. So traders who opted to come under the composite scheme will not enjoy input tax credit, and yet they will be subjected to pay tax at the rate of 1%, 2% and 5%, which they cannot charge from customers. That is the composite scheme. The word composite here means compromise. I have not finished. Please listen. Tomorrow, if some of these traders opt to come under GST, they have that option. All right? Okay. Now, I told you this point number 13, 14 and 15. I made it very, very clear to you that just now I made a statement. I said when GST structure was being finalized, states had two apprehensions. One, that they may lose revenue. Two, they may lose autonomy. So this point number 13, 14 and 15 take care of their problem of losing revenue. Trust me, Kelkar was most unhappy man when he found the final structure of GST. Because according to Kelkar, Not a single sector or commodity should be left out of the purview of GST. He even went to the extent of recommending that even basic custom duty should be brought under GST. Whereas you must have noticed it is countervailing duty which is under GST. Correct? Now, if you are leaving out sectors like alcohol, petroleum, electricity, and even built houses. I am selling my built house to you. There is no GST. But if there is a house under construction, there is an input going. So that will attract. Have I made myself clear? An under construction house has input, cement, etc. That will attract GST. But if I am selling a built house to you, there is no GST. Correct? So, according to Kelkar, the father of GST, I would say, no sector should have been left out of GST, and yet, when the structure was being finalized, states were adamant. They told the center very clearly that if you bring these commodities under GST, we will be out of GST. So there was no choice left with the center. And I would say states on their part were not wrong, because they felt that they may be losing revenue. So much so that point number 16, as I said, has caused federal discord. You need to understand what is point number 16. What does it say? Just see. States will be fully compensated by the center for a period of 5 years from the date of implementation of GST in the event of revenue incurred by a state under GST, loss of revenue incurred by GST. GST base year for this compensation will be 2015-16. That is revenue earned by a state in 2000 with annual growth of 14. How many students have understood this point? Tell me. Explain.
So it means that सेंटर गारंटी कर रहा है कि 15-16 मतलब प्री जीएसटी स्टेट्स को जो रेवेन्यू आ रहा था वो अगले 5 सालों तक अगर उससे कम आता है तो 14% इंक्रीमेंट के साथ देंगे। कोविड में जो हुआ था वो एग्जैक्टली ये हुआ था कि इनका कम हो गया।
नहीं, आप जो कह रहे हो कि भाई जो रेवेन्यू एक स्टेट 15-16 में अर्न कर रही थी, पोस्ट जीएसटी यानी फ्रॉम 1st जुलाई 2017 to 30th June 2022, 5 years, if state is losing revenue, it shall be compensated at the rate of 14% annual growth. Annual growth means if a state had 100 crores of tax revenue in 15-16 and in 17-18, if there is a shortfall, it will be compensated to the extent of 14% on 114. Next year, 14% of 114. This clearly brings home the point I have been harping on, that states had a major apprehension that they may lose revenue. Now comes a very important point. Same point I said, why it has called federal discord. I'll tell you. Center started calculating its revenue position, correct? And it felt that perhaps it may not be possible for the center to honor this commitment vis-a-vis states, correct? So it took a very important decision. Before I tell you about the decision, answer how many rates are there under GST? Sorry? 4. 5%, 12%, 18%, and other than gold and silver, which is 1.5 and 3%. These are 4 major rates. And let me tell you, majority of the revenue comes from this, where they have, states have calculated, or government has calculated. When the center agreed to compensate states at the rate of 14% annual growth in revenues, it felt that it may not be able to garner revenues to meet this, to honor this commitment. What it decided was something which has caused problems with states. It decided that it shall impose cess on all goods, because 28% rate actually is on two kinds of goods: luxury goods and sin goods. Sin means pap. Beverage is considered as sin good. Tobacco is considered as sin good. So 20 highest rate is on luxury goods and sin goods. So the government decided that since it may not be able to garner revenues to compensate states, it decided to impose a cess over and above 28% on a large number of luxury and sin goods. If I tell you the rate of cess, you will be shocked. This cess ranges from 1% to 290%. Imagine a car like Lamborghini. How much cess it can attract? Because somebody who's buying that can afford anything. If you go to a country, Monaco, which is just about an hour and a half from Cannes, I happen to have traveled extensively over my tenure. Just an hour and a half from Cannes, where these festivals are held, you know, the international festival. Monaco has per capita income of $234,000. USA has $60,000 per capita income. If you go to Monaco, the best healthcare services in the world, there is hardly any celebrity who doesn't own a house in Monaco, including Amani, including all these, you know, tennis stars, football stars. These are all celebrities. I'm not talking of Indian cricketers, all right? So try and understand. So, government, so for 5 years, up to June 2022, this cess was there. And this is called compensation cess, because revenue from this cess is used to compensate states in the event of loss of revenue under GST. Correct? Came June 2022, 5 years were over. Correct? Center took a decision that it will continue with the cess, but it will not use the money to pay, to compensate states. You will agree that in the present setup, NDA states will not say anything, say yes or no. But non-NDA states would always have a serious grudge. That is for everything that is happening, right? So this has created federal discord. And time and again, after meetings of the GST Council, I said bi-monthly, this is raised. Government took a view that 2 years of pandemic, once they are over, demand would increase, consumption would increase, revenue from GST would also increase, so that there may not be need by states for this compensation. I am sure on day one when I met you, I said must read at least one newspaper. May GST revenue is little shorter, smaller than April. Right? I think it is 1,58,000 crores, whereas April we got 1,85,000 crores. So try and understand. Point number, this is point number 16 is very important, because while center has decided to continue with the, cess, but it has also decided that it shall not share this cess with, revenue from this cess with states. And why it is called compensation cess? Because revenue from the cess was to be used only to compensate states in the event of loss of revenue. All right? Okay. So we finished point number 16. Yes. Although I asked you to jump straight away to point number 20, but let me address the problem of autonomy now. Take a look at point number 17. What have you understood from this point?
दो कैटेगरी में डिवाइड करा है बिजनेसेस को, एक जिनका टर्नओवर 1.5 करोड़ से नीचे, एक 1.5 करोड़ से ऊपर। तो 1.5 करोड़
माय डियर, मतलब बता दीजिए इसका क्या है, वो तो मुझे भी पता है।
1.5 करोड़ से नीचे वाले जो बिजनेसेस हैं उनमें से 90% जो कलेक्शन करेगी वो स्टेट करेगी।
इसका मतलब क्या हुआ?
मतलब सर जो
इसका मतलब है ऑटोनॉमी, because what you have written is the power to scrutinize. Just see, states will have administrative control to audit and scrutinize 90% of all those businesses having annual turnover up. I ask you a question, what is autonomy? Power. Now I'll tell you something interesting. I just now said that I was pursuing every meeting of the GST Council, at least for the next 30 odd meetings, 30. I remember very distinctly that 4 meetings of the GST Council, one after the other, concluded without any decision on this point. Because Jaitley was adamant. Jaitley said, sorry, I can't give this. State said, fine, if you don't give this, we are out of GST. In the 5th meeting of the GST Council, Jaitley succumbed. Said, okay, I give you this. And point number 18 is also the same, autonomy. So states wanted to ensure, A, that as far as possible they do not incur loss of revenue, for which they made sure alcohol, petroleum, electricity are out of GST. And autonomy is addressed through point number 17 and 18. Now, point number 19, some of you may be interested to know, sir, what exactly is this? I ask you a question. I am explaining point number 19, anti-profiteering clause. Since GST is in the nature of a national level VAT, at each state, GST is being paid only on value added. Correct? And going by what Kelkar said, if it is being paid on value added, prices should come down. Say yes or no. Let's say there is a trader who, despite having paid tax on value added, has been charging high price. Correct? Based on complaints by some consumer organizations against this trader, there could be an investigation for which the government set up anti-profiteering body. Correct? Actually, it was to be set up for 5 years. Now it stands merged with CCI, Competition Commission of India. All right? Because if you ask me, as an economist, when this body was set up, we criticized it. And the criticism was very genuine. The criticism was that, look, for all purposes, you are giving rise to Inspector Raj. Inspector would have the right to go to a retailer or a trader or show us your accounts. You are increasing paperwork. Whereas GST should be self-compliant kind of a thing. But now it's merged with, there is no separate anti-profiteering body. Okay, point number 20 is what I had explained perhaps in the class before. What does this mean? Goods and Services Tax Network was created to smoothly implement GST. Do you know the man behind creating this GST network? A very famous man. It is, okay, it is that man who has given Aadhaar to this country. Nandan Nilekani. He created this network. And I told you the other day, GST is a completely technology-driven this thing. There is no human interface in this tax. I am paying GST every month. I cannot go to a bank and to my bank and say, this is my GST, please correct. It will refuse to. It is to be paid by the click of a button. I remember very distinctly. 1st July GST came. Whatever check we had received on 1st July, of course, from Wajiram, right? Was that right? It was to be paid by 20th August. Because for professionals, you pay by before the 20th of the next month. For businesses, they can have the quarterly this thing. Came 14th August. I asked my CA, Vikas ji, mera GST de diya. He said, sir, I have been trying to give GST, but I am not getting the link. I thought there was something wrong with my HDFC bank. Then I checked up with all other colleagues of mine. They were having similar problems, which means they may be having accounts in other banks, even that was not accepting. So, on the 20th, every newspaper carried headlines, GST system collapses. There were all kinds of glitches because it was a new system. You don't blame, right? So for the first 5 or 10 days, the first government said you can pay by check till the system is, brought to order. So there is no human interface involved in GST. Everything is online. You just use your GST number and pay that, yes.
सर आपको जीएसटी क्यों कर रही है? आपको तो इनकम टैक्स देना पड़ेगा.
मैं इनकम टैक्स भी देता हूँ, जीएसटी भी देता हूँ, लेकिन जीएसटी मैं अपनी पॉकेट से नहीं देता ना. आप जो जीएसटी दे रहे हो वही मैं दे रहा हूँ. आई एम नॉट गिविंग आउट माई. आई गेव यू द अदर एग्जांपल द अदर डे. यू डिडंट गेट द एग्जांपल that if I am getting 20 lakh checks, 10% TDS is deducted straight away, 18% on 20 lakhs. So the check that I get is 2160. So 360 I am paying as GST.
सर सर्विस प्रोवाइडर के लिए है ना वो, तो आप तो
मैं सर्विस प्रोवाइडर नहीं हूँ. क्या कर रहे हो?
जॉब है ना सर आपकी.
Enjoy yourself. Point number 21. What? Why are you disputing the fact that I am paying GST? How do I prove that I am paying GST? Enjoy karo aap. Point number 21. What have you understood in point number 21? Export shall be zero rated. What does zero rated means? They will pay GST, but they'll get refund. Tell me why. Why should straight away they not pay GST? Because? अरे भाई मैं और सवाल पूछ रहा हूँ. I am asking you, why should they first pay GST and get the refund? No. अरे नहीं भाई. Why should they first pay GST and then get the refund?
Because it's a consumer one.
No. Because don't forget, exporters are also a part of the supply chain. You could be a manufacturer exporter. You could be a trader exporter. Yes or no? You are a part of the supply chain. If you don't pay GST, supply chain gets distorted. But the question is, very important question, that, okay, you have paid GST and then got the refund. I ask you a question. You are an exporter. You paid your GST and you would have exported worth millions. 100 रुपए का थोड़ी export करोगे, correct? If you have exported worth millions, you would have paid GST worth lakhs. Yes or no?
Yes.
If you don't get refund in time, your capital is blocked. And if your capital is blocked, it hampers your execution of further orders. This actually was happening initially. Right? I remember in the first year, there was a headline in Economic Times, 2 lakh crores of exporters' refunds are locked up. So the government has been quite proactive in ensuring that not only refunds are expedited, but also they have found a mechanism to ensure that straight away this can be addressed. All right. So that is the reason. Then, of course, you have written imports shall be treated as intrastate transaction. Obviously, because which state uses imports? You don't know. So, they are treated as intrastate transaction and subjected to IGST. IGST is nothing but GST, which is also shared between the center and the consuming state. And the last one is what I said, e-way bills. What are e-way bills? Supposing you are transporting goods intrastate, within a state, of the value of more than 50,000 rupees, you have to generate an e-way bill. So, be it intrastate or interstate. Now I am explaining what is an e-way bill. Somebody who is exporting, who is transporting these goods, has to go to the GST portal, download this e-way bill, which will give, where it has to give all the details. This is the transport truck number. This is the manufacturer or trader. These are the goods, the nature of goods which are being transported. This is the value of the goods, and these are the states through which it will pass. All these details are to be given in the e-way bill, which is to be downloaded on the portal. Same information goes to every place where it is, right? So that when your truck is passing through these states, there is minimal need for those authorities to stop the truck and ask, show us. So that is what you said. It will, bring about uninterrupted movement of goods and services across the nation. So my dear friends, this is your understanding of All India Goods and Services Tax. And let me tell you that undoubtedly no country in the world has as many as 4 rates of GST. This is one of the biggest problems. We have been hearing and reading that for the last 4 years, the government has been trying to merge 12% and 18%, right, into 16%. This has still not happened. You'll also agree that at any given point of time, you would have problem of fake invoices. That can always happen. And we have also been talking about the need for what is called an appellate tribunal. You see, your GST, you are not given refund or whatever. Where do you go to? So yes, there should be an appellate tribunal. All right? So, multiplicity of rates, fake or, fake invoices, lack of appellate tribunal, these are some of the issues they really need to be addressed. All right? Because basically most countries in the world have only 2 rates. So a large number of rates complicate a tax structure, whereas basically you talk about GST as a good and simple tax if you were to simplify this whole thing. All right? If you have any question, please don't hesitate to ask. Yes.
Sir, IGST is international goods and services taxes.
Integrated, not international.
So what is when we go abroad, when we pay IGST international goods and services?
Abroad में कहाँ देते हो भाई?
Abroad, like there is some tax which we
Abroad में तो जहाँ जाओगे तो वहाँ GST दोगे, वहाँ का GST दोगे. और आपको एक और चीज बताऊं, अगर जब अब्रॉड जाओ तो बड़ी इंटरेस्टिंग बात बताऊंगा. सॉरी, नहीं, very interesting. Let's say you are in London and you have purchased goods worth so many pounds over the period of your stay, and you have paid GST. You can claim it at the airport. There is a GST refund counter at every airport, where of course ये नहीं है कि आपने $90 का 90 पाउंड का खरीदा तो जाके नहीं है. Up to a certain amount of pounds or dollars or whatever, you are not refunded, but beyond that there is a refund. There is a certain percentage that you can claim as refund. Every airport has refund counter. Every airport. पूछिए क्यों? Basically it's nothing but exports. Yes or no? So this is our, actually, I told you that ultimately we end up with what is called the most significant indirect tax introduced in India, which we were talking about for a long time. But I repeat that the structure is still half-baked because it excludes some very significant sectors. All right, so if you have any question, please ask me before I move on to a very important second phase of fiscal policy, which I said would be borrowings. You remember, I said fiscal policy has three components: revenue of the government, expenditure of the government, and borrowing. And I also made it very clear, expenditure is not going to take us more than half an hour, maximum, maybe. But it is borrowing which is going to really take us quite a bit of time, because you have to understand all those deficits which appear in the union budget, particularly fiscal deficit. And I explained to you in the very first class, the fact that the word deficit itself means there is a difference between what you earn and what you spend. So it is in the context of borrowings, that is the deficits, that we will also, once the deficits are over, once my explanation of deficits is over, logically we will do FRBM Act, Fiscal Responsibility, and because unless you have done those deficits, you will not understand the act itself. Have I made myself clear? Right? Give the heading now, borrowings of the government. Yes. Yeah. Yes, not criteria. 90% was mainly that majority. A large chunk of all those traders having turnover up to 1.5 crore shall be governed and in terms of administrative control by states. It could be 70%, it could be 80%.
My point being, wouldn't it, like imagine there are two different governments at the state level, at the central level. So if, wouldn't it lead to favoritism among, like...
Why? There is no question of favoritism here. Here the simple thing is, if you are having business turnover up to 1.5 crores, the power to administer and scrutinize your accounts lies with states. Simple as that. There is no question of any conflict or anything. So have you given the heading borrowings? Borrowings of the government. Exports. I said that point number 21 says, yes, exports shall be zero rated, in the sense that exporters will pay GST but will get full refund of GST. Correct? I explained this point to bring home to you the fact that why is it that your exporters have first to pay and then get the refund. I gave the rationale for this. I said the rationale for this is that if this is not done, it will distort the supply chain, because exporters also fall in the supply chain. You are a pure exporter, that means you are a trader, or you are a manufacturer exporter. In any case, you are falling in the supply chain. Hence, unless you first pay, supply chain gets distorted. That is what I said. You export goods only in the domestic market. From domestic market you are exporting. Then, and GST is in the domestic market only, not foreign market. Again, exporter, who is an exporter? He could be a trader, no? Say yes or no. Correct? So if you are a trader, you are also falling in the supply chain. Or if you are a manufacturer exporter, you are also falling in the supply chain. That is the reason. Yes. Yeah, same question he asked. I don't know. Yeah. In fact, again, 90% of all those businesses having turn, that is correct. That question you should ask even in 50%, 18. How do they separate 50-50? Which 50, which 50? You understand what I am saying? That is your question. That, leave it to the center and states. Yes.
When do we claim ITC? Like after the next phase has been done or like
My dear, I gave you the entire table of supply chain. You are asking when do we claim ITC? ITC straight away comes into your account. Straight away. You don't have to claim. It is straight away coming into your account. So you have given the heading borrowings. Okay. Borrowings means deficits. Yes or no? Before you write anything, I ask you a question. What is a balanced budget? I know everybody is intelligent enough to explain. When revenue is equal to, what is a surplus budget? What is the deficit budget? Which kind of budget India will normally have? Say yes or no. Which means while you are doing this segment borrowings, effectively what you are doing is deficits. Say yes or no. Which means you are doing deficits in the budget. Say yes or no. Because who was that Shurveer? Deficits appear in the union budget only. So you have, jokes apart, try and understand. You cannot understand deficits. Listen to me carefully. You cannot understand deficits unless you understand the composition of the union budget. Last year, first question in the mains was distinguish between revenue budget and capital budget. Right? Because since deficits appear in the budget, there is no way you can understand deficits. 4 deficits appear in the budget every year, unless you understand the composition of the budget. Have I made myself clear? So we will reach that stage once we start dictating. First, please write a small paragraph. Borrowings are reflected in the form of deficits. In the union budget, every year, because expenditure of the government exceeds revenue of the government. So that invariably there is a deficit budget. Full stop. There are as many as 4 deficits. which appear in the union budget every year. Full stop. These are as follows. Number one, revenue deficit. Revenue, preferably you should write it in capital. Revenue deficit. Number two, effective revenue deficit. Effective. EFFECTIVE. Effective revenue deficit. Number three, fiscal deficit. And number four, primary deficit. Start a fresh para. As these deficits appear in the union budget, comma, these can be understood and derived only if we understand the composition of the budget. So underline the word composition of the budget, which is given below. Will you like to read what you have written? Read for 2 minutes. Something very simple. You have written there are 4 deficits which appear in the budget every year. You have written that you can understand the deficit only if you understand, because they are appearing in the budget. So now in your notes, give the heading on the left side, composition of the budget. Now you are explaining what is the composition. Once that composition is explained, you can easily derive deficits. Okay? Where are my economic students? Union budget is presented in how many parts?
2 parts.
Which are those 2 parts? It's just because I said that you are saying.
First one is policy.
Sorry?
First one is maybe a policy and second one the revenue generated.
First is?
Policies.
No. Please write. The union budget is presented under 2 parts. Called Now this should be written in capital. Revenue budget, and capital budget. Full stop. In other words, revenue budget can be called revenue account of the budget, and can also be called current day-to-day account of the budget. Current day-to-day account of the budget. Account of the budget. Whereas capital budget can be called capital account of the budget, which shows assets and liabilities of the government. Assets and liabilities of the government. Full stop. The composition of both these budgets is detailed below. So on the left side in the next para you said revenue budget. Put a dash. This shows on the one hand, underline this whole sentence. This shows on the one hand revenue receipts of the government. Receipts of the government. Please write. This shows on the one hand, I said underline the whole sentence. This shows on the one hand revenue receipts of the government. That is, now you are explaining what are revenue receipts. That is current day-to-day receipts of the government. And on the other, it shows revenue expenditure of the government. That is current, use your common sense, day-to-day expenditure of the government. Full stop. The composition of revenue receipts and revenue expenditure. is given below. So first give the heading revenue receipts. First give the heading revenue receipts. These are tax receipts and non-tax receipts. Full stop. Tax receipts are from direct and indirect taxes. Tax receipts are from direct and full stop. Non-tax receipts comprise interest earned by the government on loans, interest earned by the government on loans, comma, fees and fines charged by the government, fees and fines charged by the government, comma, rental income of the government, comma, dividends from PSUs, comma, income from spectrum, comma, gifts and grants received by the government, gifts and grants received by the government. Now give the heading revenue expenditure. This comprises developmental expenditure, and non-developmental expenditure. This comprises developmental expenditure and non-developmental expenditure. Full stop. Developmental expenditure is the expenditure of the government on providing day-to-day services, like health, education, transport, communication, export promotion, irrigation, R&D, and a large number of services it provides to various sectors of the economy, in order to manage and run the economy on a day-to-day basis. Full stop. Non-developmental expenditure. Non-developmental expenditure of the government which it incurs on a day-to-day basis, which it spends on a day-to-day basis, is maintenance of law and order, defense, interest payments, subsidies and welfare programs, civil administration, including salaries and pensions, and grants to states and union territories. Grants given to states and union territories. So this completes revenue budget. Now we have to take up capital budget. And I will convince you, once you have written, I am going to convince you, same breakup is of your family budget. But first let me finish. Please write. Give the heading capital budget. My dear, you cannot understand deficits unless you understand this. Nobody can explain deficit without this. Give the heading capital budget. Capital budget also has on the one hand capital receipts, and on the other capital expenditure. Full stop. Capital receipts of the budget comprise mainly the following. A. Disinvestment. B. Sale of assets. C. Recovery of past loans. And D. Borrowings. I ask you a question. You have shown dividends under revenue receipts, disinvestment under, why? Because government is not doing disinvestment every day. Yes or no? Correct? Sale of assets. Government may sell its land, its building, its old machinery. Correct? So capital receipts. Now let's finish the last one. Capital expenditure. Capital expenditure of the government comprises mainly the following. A, repayment of past loans. B, loans to states and union territories. And C, who can tell me? This is predominant. Infrastructure. Construction of infrastructure. Roads, bridges, ports, highways, smart cities. This is all infrastructure. Yes or no? Now I ask you a question. I give you a loan of 5 lakhs. I give you a loan of 5 lakhs. Listen to me carefully. Interest you will give me every month. Say yes or no. Yes. So interest is a revenue receipt. But when you repay the loan after 2 years, it is a. So recovery of loan you have shown as capital receipt. Repayment of loan you have shown as capital expenditure. Now the cat is out of the bag. You have got the framework and the foundation to understand all the 4 deficits. But before that, I am going to convince you that your family budget is almost similar to government budget, with 2 differences. One, when family prepares its budget, it is a monthly budget. Your mom and dad may sit together to prepare their monthly budget. And 2, more important difference. When family prepares its budget, it says, this is our income, we will spend according to this income. When government prepares its budget, it says, this is our expenditure, because government is committed to expenditure. We will have to find resources to meet this expenditure. Okay? Now I am going to convince you, the family budget is also almost of the same type. Revenue budget and capital budget. Shall I convince you? Okay. Your family, mom and dad sit together to prepare their budget on the first of the month. Say, hypothetically. Correct? Let's take into account revenue receipts, day-to-day receipts. A, your dad's income, be it from business or salary or whatever. B, your mom's income if she is working. C, your dad may have given loan, he is getting interest. D, your dad may have rented some property, he is getting rent. E, your dad may have some shares, he is getting dividend. Say yes or no. Revenue receipts. Your family's revenue expenditure, day-to-day expenditure, your education, health, expenditure on health, transport, communication, recreation, grocery, socializing, day-to-day. Say yes or no. Capital budget of your family. What are capital receipts of your family? A, your dad may have a plot of land left by his dad. He sells that land, he gets lump sum amount. Your dad may have shares He sells them, gets capital. Your dad may have given loan to somebody. He is recovering that loan. Correct? Capital receipts, capital expenditure. Your dad may decide to buy a plot of land. Your dad may decide to buy a house. Your dad may decide to buy you a Jaguar car. Say yes or no. Okay. All these are capital expenditures. Only the items are different. Say yes or no. Don't underestimate your dad. All right? Okay. So, are you now prepared that we have, there are, union budget is to be seen in the context of revenue account of the budget and capital account. The word revenue here doesn't mean revenue, here means current account. Revenue account means current because you have written day-to-day receipts, day-to-day expenditure. Is it clear? Sure. Anything you want to know before I start deriving all those deficits? Yes.
So when he writes spectrum, is an RMP going to sell it?
No. Spectrum is actually, earlier government used to show it under capital budget, now it's showing under revenue budget. For that matter, even grants. It's not that you are getting grants lump sum. Grants are always given in installments. So shall we start deriving all those deficits? Shall we? Fasten your seat belts. Turbulent weather is coming. I am going to derive the first deficit. See your notes, which is the first deficit. And I am going to call one of you on the board. Preferably the man sitting right in front of me. Question bank, come. Derive for us revenue deficit. The first deficit is equal to, give me the equation. Come. If he is writing, it will give you, it will encourage you. लीजिए. Revenue deficit is equal to,
So we say, let's say we get our salary.
sit down. Do one thing. Do one thing which will simplify ours. Wherever you have written, wherever you have written revenue receipts, give it Roman 1. Wherever you have written revenue expenditure, give it Roman 2. It will help you. Wherever you have written capital receipts, give it Roman 3. And capital expenditure, Roman 4. Have I made myself clear? Revenue receipts, Roman 1. Revenue expenditure, Roman 2. Capital receipts, Roman 3. Capital expenditure, Roman 4. Clear? Okay. Revenue deficit is equal to revenue expenditure minus revenue receipts. Such a simple thing. Yes or no? Why are you confused? You are confused? Revenue deficit is equal to revenue expenditure minus. Okay. I have not finished here. What is revenue expenditure? Day-to-day expenditure. What are revenue receipts? Day-to-day receipts. Say yes or no. Unless you say this, you will not understand what I am going to tell you. What is revenue expenditure? What are revenue receipts? Correct? Now, God forbid, this deficit appears in your family budget. God forbid, this deficit appears in your family budget. Answer the question, will it be good or dangerous? Why? Why? You know what it will tell you? It will mean that your family is not able to meet its day-to-day expenditure with its day-to-day income. Because day-to-day expenditure is running expenditure. It is not creating any assets. Say yes or no. Which means even for meeting your day-to-day expenditure, your family ends up borrowing. I have not finished. Is borrowing bad? No, even a money borrows. He has recently raised a loan in euros. Is borrowing bad? You are using credit card. It's not, you are borrowing. Borrowing per se is not bad. Everybody borrows. But borrowing for consumption? Your dad borrows to meet his day-to-day expenditure. Your dad borrows to construct a house. Which is better? Exactly. This is the most dangerous deficit government is living with. Which deficit? Even in the 23-24 budget, this is 2.9% of GDP. You can imagine. So try and understand, it is not only that we are going to derive deficits. I am going to dictate and explain to you the problems related to each deficit. This is the most dangerous deficit because it shows that the government is not able to meet its day-to-day expenditure with its day-to-day income, and it has to borrow even to meet its day-to-day expenditure, which is by and large consumption expenditure and does not create any assets. Is that clear? I repeat, borrowing is not bad, but borrowing for consumption, and once we take a fiscal deficit, I am going to tell you that if fiscal deficit is X amount, it would have been much less if there was no revenue deficit. So please write a small paragraph. It is unfortunate. Don't write unfortunate. Unfortunate means it is based on fortune. No. Please write. It's not based on fortune. Please write. Say yes or no. Yes. Okay. All right. So what do we write? Please write. It so happens, your English must be good, otherwise bad. It so happens that revenue deficit of the government continues to be high every year. Full stop. This shows that the government is not able to meet its day-to-day expenditure. Which is by and large consumption expenditure. By and large consumption expenditure with its day-to-day income. Full stop. As such, this implies that it has to borrow even to meet its day-to-day expenditure which does not create any assets. Full stop. As a result, its interest burden on borrowings also goes up. Full stop. As interest is paid out of revenue receipts. You will pay interest from your current, as interest is paid out of revenue receipts, comma, it widens the difference between revenue expenditure and revenue receipts. Would you like to read what you have written? I have already explained. My dear, you will be shocked to know that I think all of you should know that when budget comes, there is also what is called that pie diagram. You know pie diagram? Which shows how the rupee comes, how the rupee goes, which means out of every rupee that government earns, how much does it earn from corporate tax, income tax, GST, so on. How the rupee goes means out of every rupee spent by the government, how much it is spending on assistance to states, defense, interest payments. You will be shocked to know second highest payment is on account of interest. See the pie diagram of this budget also. So revenue deficit is not a healthy sign, and you will know this when I take up with you FRBM Act. That act pertains to deficits. There is no way you can dictate or explain that act unless you have first done deficits. Okay? Shall we move on to the next deficit? What is that? Yes. Effective revenue deficit. Effective revenue deficit is equal to, I am giving the equation. Effective revenue deficit is equal to revenue deficit minus, give the sign minus, those grants given by the center to states which are used by states for development and creation of assets. This is the equation, right? Start a fresh para. This is the statement, correct, or equation. Now start a fresh para. This concept, which concept? Yes, this concept was for the first time given by Pranab Mukherjee as finance minister in the budget for 2011-12. Full stop. According to him, of the total grants that the center gives to states, comma, those grants should be subtracted from revenue deficit which are used by states for capital expenditure. That is for creation of assets. Now, I am going to explain what he was saying. In order to understand what he was saying, I invite your attention to Roman 2. Please see Roman 2. What is Roman 2? Revenue. Under Roman 2, please see non-developmental expenditure. Please see non-developmental expenditure. Is there an item called grants?
Yes.
Say yes or no. Correct? Correct? Now, what Pranab Mukherjee was saying? He was saying that we should not show all grants under non-developmental expenditure. Those of you who are not understanding, let me give you a very clear example. Let's say center has given 5 lakh crores of grants to states, shown under Roman 2, non-developmental expenditure. Say yes or no. How much I have said? 5 lakh crores. Let's say out of these 5 lakh crores, states use 2 lakh crores for creation of assets. Correct? So according to him, we should not look at revenue deficit, we should look at effective revenue deficit. Which means from a revenue deficit, we should subtract these 2 lakh crores. Because they are being used they are not non-developmental. They have helped creation of assets. I think all of you should know that Kerala practically every year witnesses very severe floods. 4 years back, in fact, so many connecting roads were completely destroyed. Bridges were destroyed. So when center gave grants to Kerala, quite a major chunk of those grants were also used for reconstruction of those. So Pranab Mukherjee was not wrong in telling us that we should not put all grants under non-development expenditure. And if we have shown them, we should segregate between grants which have been used for capital purpose, capital expenditure, and grants which are used for non-development, to arrive at effective revenue deficit. Is that clear? Any doubts? Don't hesitate to ask me, because you have to go back to understand that for the first time it was Pranab Mukherjee, and thereafter every year we are showing effective revenue deficit also. Clear? Now comes the main deficit. Which one? Fiscal deficit. Why is it every finance minister in India, including Lady Sita Raman, is very obsessed with fiscal deficit? What is so important about this deficit? After all, please listen, after all, some of the European countries may be reflecting fiscal deficit sometimes as high as 7 to 8% of GDP. But they don't panic. We start panicking even at 6%, maybe even 5%. Why? There must be some reason. So this is what we are going to explore and argue, but before that I am going to give you the equation for fiscal deficit. FD is equal to, very interesting. I asked them to change the duster because there's something wrong with the board also, isn't it? They changed the duster, no? FD is equal to what? Now this is not hillowing. No, slightly it is. FD is equal to TE. Please write. Please write TE minus RR. Don't write RRR. Minus RR plus my hand is very bad. Trust me, sometimes I am not able to read my own hand. It's a fact in my notes. Then I go back to understanding in what context I would have written this. This is the equation. Shall I read out? No, FD is equal to TE minus RR plus non-debt creating capital receipts. Non-debt creating capital receipts. I am going to simplify this equation now for you. TE is total expenditure. Correct? It should be 2 plus 4. That's the reason I gave you Roman. What is total expenditure? Revenue expenditure plus RR is nothing but 1. Revenue receipts. Say yes or no. Yes, then what is this? Who can tell me what is this? Somebody who tells me shall be recommended for gold medal by Professor B. Singh. CMD B. Singh. Yes. Yes, yes. Oh, you are saying there are 2 contenders. Tell me. Tell me, in the capital receipts, Which are those? Sorry? My dear, A, B and C, all the three. What are you saying? Instead of gold medal, you will get a bronze medal. What are you saying, my dear? Recovery of past loans, disinvestment and sale of assets. Does it create assets? Loan. So what creates loan? D, borrowing. Correct? Who are engineering students here? Engineering. You are engineering student? You. Now tell me what is fiscal deficit? Nothing but borrowings. Even he is not clear. My dear, simple as that. If in this whole equation, one item is left out, what is that? So fiscal is nothing but borrowing. Exactly. What is the confusion? Yes, enjoy. My mantra is enjoy. You know what happens? You know, when there is farewell to students, you know, they are leaving this thing. Every teacher stands, says, students, you must read questions carefully. Then I tell them, look, do you think they will not read questions carefully? You must properly see, give time and all. So Mr. Singh was sitting by my side. I said, Singh Sahab, ye kya ho raha hai? All of us are standing saying questions didn't. मैंने कहा मेरे से तो ये होगा नहीं. I would sing a motivational song. All right? No, not here. Not here. I'm just saying. No, I'm just saying. It could be motivational speech or whatever. Okay? No. Let's forget about it. Have you understood? Not clear. Fiscal deficit, nothing but borrowings. Now please listen. Fiscal deficit in the budget is 5.9%. In the union budget, fiscal deficit is 5.9% of the GDP. Revenue deficit is 2.9%. FD is 5.9%. RD is, this is RD, 2.9%. Correct? Now I ask you a question of pure common sense. Should there be an RD? Because what is RD? Difference between day-to-day expenditure and day-to-day receipts. For all purposes, you should meet your day-to-day expenditure with your day-to-day income. Say yes or no. Which means a high fiscal deficit is also largely on account of high revenue deficit. That is why we panic in India. We know that whatever we are borrowing to the extent of 6% of the GDP, which translates into, I think, 17 lakh some thousand crores. Because if your GDP is X amount, multiply this by 16 and a half, you'll get, your GDP is 2 lakh some crores, right? 6% of that comes to about 17 lakh crores. I'm talking of, in absolute terms, your fiscal deficit. Now, you are borrowing a little over 17 lakh crores to finance, half of this is being used to finance your day-to-day expenditure. This also, justifies that statement which I asked you in terms of whether borrowing is bad or good. There is nothing wrong with borrowing so long as you are using it productively, constructively. So we panic at 6% also because we know that quite a bit of this is being used for non-productive purposes. There's nothing wrong with fiscal deficit per se. I said some of the countries in Europe, they are running a fiscal deficit quite high, but they don't panic. Oh, that's a debt limit. That happens very often it happens. When this was going on, we were sitting in a conclave. Somebody told me, oh, what happens if this is not agreed to by the other party? And stock market will plunge. I said, what are you talking? This happens quite often. And every time there's an agreement reached. Every time. The reason is very obvious. My dear US, we always say, this is a country which, when United States sneezes, the world catches cold. What are you talking? Such a big, huge country. It has its own reputation always at stake. Be it Republicans or Democrats. They will not allow this. Never. It's such a big country. Here is a country where where the recession may first begin and spread to the entire Western Europe and so on. Right? And yet this will be the country with such resilience that will bounce back. To bounce back, it will be the first country. I remember 2008 global financial meltdown. It started in the US with the collapse of Lehman Brothers. The entire Western world was in recession. We even were talking, there's a question which came in civil services, because that time we were talking of a term, we were thought double dip recession. So the question came in civil services, what is double dip recession? Once the recession is over, the other is looming in the face. That was the situation in the Western world. The financial meltdown began in the US with the collapse of Lehman Brothers. I'll talk to you about this when I take up inflation and depression and so on, right? But US was the first country to bounce back. My dear, $60,000 per capita income. Yours is only $2,000. Where are you? Nowhere. All right? Very big, huge country. I was sure this is happening periodically, this debt ceiling and so on. And there is a compromise between Democrats and Republicans, whichever party is ruling and the other one. All right? Okay. So have you understood the equation? So, but it's important for you to write what are the serious implications of running a high fiscal deficit. So please write. Please write. Yes.
Have you ever been in net surplus of RD? Ever since,
We've never had a surplus. Perhaps, if you ask me, if you go back, I would say roughly we started having revenue deficit roughly after mid-70s. Roughly. Okay? So please write.
and is this peak right now?
No. This is still, because last year it was 3.6%. Do you understand? So please write. I'm going to give you implications of running a high fiscal deficit. So you must write that fiscal deficit projected in the union budget. Fiscal deficit projected in the union budget 23-24. Fiscal deficit projected in the union budget 23-24 is 5.9% of GDP. Are you reading newspapers? Sure. What was the fiscal deficit which ended in 22-23? 6.4%. It came in newspaper 3 days back. 6.4. It was projected at 6.8. When final figures came, it was 6.4%. So please write. Fiscal deficit projected in the budget 23-24 is 5.9%. While revenue deficit is projected at 2.9%. Full stop. A high fiscal deficit may have the following implications for the Indian economy. Number one, high fiscal deficit. May be mainly on account of high revenue deficit. Mainly on account of high revenue deficit, which shows that substantial amount of borrowings are used for non-productive purposes. That is, to meet high revenue deficit. Two, high fiscal deficit results in high interest burden, which in the budget is shown as second highest outgo from every rupee spent in 23-24. Number three, the government plugs, P-L-U-G-S, plugs this deficit mainly by borrowings from banks and financial institutions. Don't write RBI. From banks and financial institutions by pledging government securities. Four, as government borrows more, from banks and financial institutions, comma, it leaves less with banks to lend to the private corporate sector. To lend to the private corporate sector. Full stop. Same point. In economic jargon, JRGON in economic jargon, this means that high government borrowings from banks crowds out the private sector. Crowds out. You should put it in inverted commas. Crowds out the private sector. Next. Will it be fourth or fifth? Yeah, next. As private sector is crowded out, comma, it has to fall back. It has to fall back on loans from sources other than banks. From sources other than banks at higher rates of interest. Full stop, same point. This higher cost of borrowing, may then be passed on. This higher cost of borrowing may then be passed on to consumers by way of higher prices. By way of higher prices. And next, last, high borrowings by the government bring down its credibility as well as its credit rating by global credit rating agencies. Full stop. As a result, if government borrows abroad, it may be at a higher rate of interest. If government borrows abroad, it may be at a higher rate of interest and more stringent terms. Okay? I would request you to read this, whether here or back home, so that tomorrow we take up the last deficit as well as FRBM Act 2003 as well as its review by NK committee. And also we'll have time to finish government expenditure, hopefully. If not, it can be carried forward to the next 15-20 minutes. Is that clear? Any doubts? But you must read, so that tomorrow I'm going to ask you, what have you understood in terms of, shall I say, serious implications of running a high fiscal deficit? Yes, sorry. Credit rating. Have you heard of Fitch? Have you heard of Moody? He has not heard. These are, I'll tell you, very interesting thing. Very interesting. If Moody gives a bad rating, then we start criticizing Moody. We start not only criticizing, we start challenging its rating and saying, oh no, parameters used by Moody are not. Do you understand what I am saying? That should not be so. I am not saying their parameters are right or wrong. What I am saying is, it is doing so for most economies. So, unless of course you are able to prove that this is prejudicial, biased, then things are different. But they adopt certain, parameters based on predominant activities in a country. Okay, so tomorrow we meet. First thing first, I would like to ask you what you have understood in terms of the implications I have given. All right, and then finish the last deficit as well as the FRBM Act. Hopefully, government expenditure also. All right, okay.